Hello everyone, this is Scramble from Emotionless Crypto Trading, and today we're going to talk about the crash. The crash we're into, the correction environment we're facing, and hundreds of billions of dollars that left the market cap and the entire space of cryptos. Right? So this is not only happening with Bitcoin, it happens with the altcoins. I can definitely see that a lot of the altcoins are suffering more than the way Bitcoin is kind of suffering right now. And of course, this is usually happening with the ones which are not having foundation area of support established that meaningfully like Bitcoin has. So in this case, they do suffer a lot more and the volatility is way bigger. We do have some cryptos that decreased even 300% in the last 12 days. And they're not baby cryptocurrencies. They definitely have about 50 million or 100 million market cap, so they're not that small to be considered just pure pump and dump cryptos, right? So we're talking about some of those guys which are having volume of a couple of millions a day, and they still had a huge decrease during this correction environment. We just kind of reached the bottom. From what it seems like, always and always, one of the ways to identify the bottom of a crash like this or a correction environment is that always in the last day of this, we're going down parabolically, we're going down insanely, and it's like there are no buyers at all. Everyone is just selling and selling. Now, one of the reasons the volatility between the way we're growing and the huge difference between the way we're growing when the marketplace is going boom and it's parabolic and it's everyone is just hashtag on Lambos and all these things, right? So at that time, everyone's happy. We're taking up, we're building, we're taking off, and we're doing everything just to make all the cryptos more and more popular to get people on board, right? This is what the majority of people do, right? And not talking specifically about myself. Now, when the crash happens, due to the fact that since the last crash, we've got a bunch of new people in a space and they're trading based on their emotions. They're scared as it's the first time for them facing such a crash. They're scared. They probably bought at highs. We're going to show you in the next second some specific spots where people bought in and they got under panic, seeing the market going down the way, thinking that some specific cryptos, Ripple will reach down to 10 cents again, Bitcoin to $500, Ethereum to $10, and this kind of responses, which I definitely heard from people like this, getting that scared to sell out no matter what's the loss, just to sell out because they don't want to lose everything. Now, it's not possible to be involved in the crypto space today in 2018, in January 2018, to have a loss of 30% because of a correction and to claim that you're afraid not to lose everything. So it's not possibly, technically speaking, in the next period of time, once the crash is going to have the bottom, from there you're going to be able to recover very smoothly and take a lot of profits ongoingly from there. So don't be worried about the current situation of the market. Do not sell if you're running on minus unless you have a better choice to speed up your earnings. So everything, when you want to make a decision, when you want to make a trade, you have to look at the ROI, right? Return of investment. That's pretty much all. Who cares what's the coin name? Who cares what's the market cap? Who cares what's the rank, as soon as it's all legit and it has the potential to bring you a higher return of investment, as long as we're talking about legit projects. Of course, you do care not to invest in a crypto that's scam and it has a very low market cap, it has no volume, but they have a beautiful design on their webpage, a beautiful design architecture of a white paper, and all those things which are not as important as the trust. Trust is way more important than all the other details. So I kind of spoke a lot about it, so let's just move forward. I wanted to make this video short, but I'm not sure if I'm going to have it short. So let's take a look at the market cap. 580 billion. Small compared to what it was. It was 828 billion January 7th, 2018. 828. It's almost 300 billion. Let me just take a look here at the bottom. Almost 300 billion that left the space in matter of kind of 9 days. 9 days, almost 300 billion out. Not in the market cap anymore. Not involved. They moved into USD, right? So these guys are having funds in USD. They will buy back. That's why you don't have to be scared that this money is kind of gone. No, it's going to be back. So we're officially we're not at 826, 27 billion, but people do want to put that money back most of the times in the crypto space. So for sure we're going to have a new all-time high very soon on the entire market cap, especially when Bitcoin is going to take the spotlight once again, and it's just going to go parabolically up to 25, 30,000 bucks per token. So what I wanted to show you here is I made a screenshot of this and I put it up on Paint. So here we are on Paint. And what I wanted to show you is the cycles we have and the way they have grown over time as per our market cap. So here's the first cycle. Here's the first cycle that represents a nice pump of the market, and then of course a correction phase. Here's the next cycle basically, right? Here's the next one as well. Here's the fourth one as well, right? So what we were having is we kind of had movements like this, right? This is the way it looks like. All these correction phases are active only and only after periods of time when the market went parabolically without any sort of bearish movements by domination. So bearish was not dominating at that time at all, right? So looking at the charts over here, we can definitely see that. I'm just gonna clear it a little bit to share with you once again in a different way, that we do have a pattern here that really means a lot. The bottom of the correction phase is very near to the previous top, right? So the previous top from where we started is right there. You can see the bottom of the next correction phase. Previous top for the next correction phase is this one. This is the bottom, which is very near to the previous top. Bottom very near to the previous top. Previous top with our bottom right here, very, very near to our previous top, right? So what's happening is we're gonna have a high movement. Of course, not that parabolically as I'm making it over here, but way differently, way more naturally. Exactly like we had over here, with a lot of volatility. So expect right now possibilities for speculation in the crypto space. You will have a lot of these possibilities and chances right now because the volumes and the huge differences in the percentages will be very, very high from now, especially after we have reached the bottom of the crash. So this is where it looks like, as long as we do confirm here very, very near to our previous high level, which is this one, right? Previous high level. As soon as we do that and we respect the previous history's pattern around the market cap, we will just take it forward in the other direction and go parabolically. And of course the next step is between 1.5 and $2 trillion, and then we'll just come down to, what was that, like 830 billion dollars market cap. For sure will come down below 1 trillion from what it seems like. Depends how high it's going to be the next cycle. How high is going to reach. Is it going to be 1.3, 1.7, 2.2 trillion dollars in the total market cap? So that's therefore the way to define that is to run at that specific time market analysis and see how deep the correction could go down the way. But of course, as the pattern shows us, it's very, very possible to see the bottom at the previous top, right? So very near to that. Now, that's kind of all around this thing. Of course, it's very helpful for you to be able to read the charts of the global market capitalization, as well as to see how the dominance of BTC is definitely suffering a lot. It's currently around 34%, of course, and this thing has been just going down the way since early December, since around December 7th, going down the way, suffering. Bitcoin dominance was at 65% at that time, and of course this is just going lower and lower because a lot of great projects are coming out in the alts market, and that's definitely normal. So here we have a market analysis for Bitcoin to US dollar. Very beautiful support zone which has been established, confirmed, and created by previous structures. That's kind of represented around 11,000 bucks as well. We do have a downtrending resistance line on which we're going to have a breakout soon, which will consolidate into our recovery phase, right? So we're talking about this downtrending resistance line, which is kind of setting up a channel, the downtrending environment channel. But of course, once we're breaking out of that, we will have the start of the recovery phase for our space, especially that the market cap needs to jump back up to. You'll see how fast we're going to be above $650 million once we have touched exactly the bottom. Hopefully tomorrow we're not going to have another negative day, another bloodbath day, as from the way the charts are looking on the market cap side. Right here we kind of reach the previous high, right, of the previous cycle. So historically speaking, we're there where we have to be in order to start recovering. We'll see how that plays out. Now this is all around BTC. We definitely need a breakout and then start consolidating on the recovery phase. Of course this is going to happen, as well as the resistance lines which we might have in the future for BTC will have to recheck on a faster and quicker time market analysis to that specific period of time we're trying to start trading, right? So next videos will be shared for that, for you to see the resistance lines, which are very important. Of course I do see a couple of ones right here. We do have a very powerful one at this level from what we were able to establish the downtrend, right? So at 17,000 bucks right there, it's very, very meaningful for us. On the other side here is an example of a altcoin, which is Ripple to US dollar. 2-hour candlestick, of course, like on the other side we had just 2-hour candlesticks. Here is another example of how the crash affected an altcoin, which was pumping quite parabolically up to $3.3, aggressively moving up from just a couple of cents. It was 15, 20, 22 cents, and then it jumped up to 3.3 bucks. Again, 10x basically for Ripple in a very, very quick period of time. And this is not really, you know, permitting sustainable growth. It's allowing to grow in the long term, but not sustainable. It's kind of with a lot of you know, parabolic movements up or down, which means vulnerable market, right? So that's what we're talking about here, as well as the downtrending resistance line is extremely aggressive in this case, and you can definitely see how we are touching right here the should I say the bottom as well. That's the point we have closed on our, should I say, downtrending parabolic movements marked down on the price and correction phase, exactly like the market cap happened at $1.2 within Ripple's case. So exactly that's also the period when we're hitting with our downtrending resistance line on the horizontal support which we have here, which has been confirmed previously that it's from previous resistance, it become our next support basically. So that's pretty much clear. We're gonna break out of this for sure, and we're gonna test the 1.77 resistance line from where we had the last markdown triggered, right? A markdown is a decrease in price and a pretty aggressive one from here, right? So definitely the market it's gonna start consolidating after we break out of the $1.77 price point for Ripple. This is just an example from here how low you can go with an altcoin, especially if you were in a pump, an aggressive one, right? So 176% in 11 days. That's right there, the statistics you can see, 176% in 11 days and 22 hours. That's huge, and that's in the same time insane, right? So very risky for people who bought above, and there are a bunch of them who bought above at all these levels. So what they have to do is, of course, the only possibility for them is just to hold and be patient enough till the market is going to get back to those levels. If they want to get out of the coin, they can get out of the coin at that time, or they can ride it forward. But now, by the way the market looks like, just looking at the changes here, we've got minus 37, minus 33, a bunch of cryptos minus 31, 32, Verge minus 30%. That's quite a lot. But of course, they were going aggressively up when the market was look at this. Look how the charts are looking for Verge. This is insane. Look at that volatility and speculation possibility. So that's huge. That's really, really huge. And this kind of things can be seen only in a non-matured marketplace, exactly like it's the crypto. 1,450 cryptos up there, and another 50 to 100 which are not active on the market cap yet, but they will be active. So I'm gonna make some other videos as well about ICOs for February, ICOs for January, and all these things are definitely content that I'm trying to publish on my YouTube channel as well. So feel free to keep yourself updated with the latest news, with market analysis, price analysis, charts, ICOs, and all these things as much as I can on my YouTube channel, guys. Feel free to check that. If you subscribe, you'll get a notification when I post, and that's pretty much all. So for collaboration, coaching, whatever you have on mind, descriptions can be found in the description area, and all the links, of course. So that's kind of all. Thank you so much for watching, and see you next time.